Oh, it's definitely earned me more money. Just like Decatur, they were paying 70 cents more for summer corn there in August. We were hauling corn 100 mile for 40 cents, and we're making 30 cents, and I wouldn't even known that price was probably on there. I wouldn't have thought of calling Decatur, but when you go to the Grower's Edge page, then it takes all that running around out of it for you.
Good afternoon, welcome to GrainTV. My name is Cody Bills, this is Logan Burgess. Today is June 4th, and we had a bit of a mixed bag in the grain complex today. Let's turn right over to the Fire Tip trading platform, see where we closed off the day here. Corn for July delivery trading up 4 3/4 cents, with new crop trading down 7 cents. Soybeans trading down 3 3/4 cents for old crop, and new crop trading down 9.5 cents. Wheat was for the most part unchanged, with Kansas City down 3/4 cents, and SRW wheat trading down or trading up 1/4 cent. You know, Logan, I think weather really seems to be the driving factor here. Right. Maybe you could go through. Do you think that is what's causing the trade in the last few days?
Yeah, certainly. You know, we've seen soybeans really the leader to the upside today. We did see a little bit of a deviation from that, but I think within today's trade we saw some strength out of soybeans. Really what's been pushing things is the precipitation outlook here over the next 2 weeks for the grain belt. Take a look here at this chart provided by Planalytics. This is June 3rd to the 9th. You can see that at least moderate rains expected throughout the corn belt here. If we go down the road a little bit here into next week, you can see that between the 10th and the 16th, heavy rains expected for almost the entirety of the corn belt here, you can see, and certainly in some key places where they do not need it right now. Much of Iowa is in that situation from talking to producers out there, and certainly with soybeans in mind, on Sunday we saw the USDA report 57% of this crop planted. That's the lowest pace that we've seen at this time in the planting season in 17 years. So certainly the pace was behind where people wanted to see it, and it doesn't look like the outlook here over the next 2 weeks is going to help anything out.
Absolutely, and you know, if you look at the chart here, we're looking at a November soybean chart, and what you can really see is that I think the reaction to this weather is really, it was yesterday, and today what we saw is more of a pause. We moved back, we broke out of some serious resistance here. Let's take a look. You'll notice in the November chart, if you draw a line up top, it's a trend line here. We broke out of that. We broke out of 13. And we broke out of this 200-day moving average, and that was a pretty important technical move here. Today we came back, we retested that 13, and we closed on the higher side of the range that we printed today. But really, you know, not only have we seen the weather reflected in the futures market, but we've also seen it in the cash market. Right. One of the things that we notice is that the river, along the Mississippi and Illinois River, we actually saw river bids fall about 9 to 11 cents, and that has a lot to do with the fact that just there's been a slowing of grain barge loading, and so I think I wouldn't be surprised to see that affect beans. One of the interesting things, though, is you know, when we look at GPC over in Washington, Indiana, they actually have raised their cash corn bid. They raised it 18 cents today to plus 83 over the July contract. It's interesting to see that corn continues to show strength here and is a very firm basis mostly throughout the U.S. Yeah, absolutely. We've seen some very interesting movers here in the last couple of weeks, I guess, just in terms of cash basis. Each day here we've been developing a cash basis map, which basically shows the best marketing opportunities throughout the corn belt, taking into consideration trucking and storage costs. And if you want to take a look at that for yourself, you can visit us over at GrainHedge.com. You know, in general, though, Cody, I think you kind of hit the nail on the head here. Soybeans did have a breakout yesterday. Today, in the night session, we saw some pretty heavy selling, but we weren't able to go back below that trend line. You know, in my opinion, I think that does indicate that the soybean market may be able to hold on to these gains for a little bit here. If you want direct access to these markets for yourself to draw these charts here that Cody was just talking about, you can visit us at GrainHedge.com as well. Coming down the pipe here for the grain market, tomorrow we will be getting the ethanol report, and Thursday the export sales report. Last week we saw a pretty strong crush margin continue in the state of Iowa, about $1.86 per bushel. So expect another good weekly production figure there. Keep in mind that last week's number is going to be reflective of a 4-day week, so it should be a little bit light for that reason. But in general, demand out of the ethanol sector should remain strong here. That's kind of what we saw here for a Tuesday in the grain market. Thanks a lot for joining us on GrainTV. We'll see you tomorrow for the EIA ethanol report.